Hi, I'm John Olsheimer, a credit expert who contributes to creditcardinsider.com. Today's question is this: is my credit history looked at differently when applying for a credit card versus when I'm applying for a mortgage loan? The answer to the question is absolutely. Very, very different consideration given to your credit history or credit reports and your credit scores. When you apply for a credit card, only one of your credit reports is going to be pulled, and only one of your credit scores are going to be pulled. And because it's a very low dollar extension of credit, usually not more than $25,000, and in many cases much less than that, there's generally an instant approval based on the application that you submitted. Further, there's little to no verification of the information that you submitted on your application. So think about all the information that you filled out either on your paper application or if you applied online. Name, address, date of birth, social, employment, income. There's really no verification of any of the information that you put into that form. The only thing that they're going to do is they're going to pull a credit report, pull a credit score, and if your score is high enough, you're going to be approved, and within 30 days, you're going to get a card mailed to you and you can start using it. And that's really the A to Z of the process of applying for a credit card. With a mortgage, it is an entirely different story, completely different. Because it's such a high dollar loan, hundreds of thousands of dollars in many cases, all three of your credit reports are going to be pulled and all three of your credit scores are going to be pulled. And that's per applicant. So if you co-apply or if you have a joint applicant for a mortgage loan, like a husband and wife, for example, then all three of his credit reports are going to be pulled, all three of his credit or her credit reports are going to be pulled, and all six of your collective credit scores are going to be pulled. The lender is then going to use the middle numeric score from each applicant as the basis for the decision. And unlike the credit card application environment, where really it's all based on a credit report and a score, in the mortgage application environment, there are three things that are being considered by the lender. Creditworthiness, which is the credit report and the credit scores. Capacity, which is your income or your ability to make that large payment every month, because your mortgage payment is generally the largest payment that you're going to have to make every month, and the bank wants to know that you have the capacity or the income to be able to afford that payment every month. And then collateral. The collateral is the value of the home relative to the loan amount. So if you go out and you find a house that you love and it's $100,000, but the appraised value of that home comes back at $50,000, then there's no way the bank is going to let you borrow $100,000 to buy the house, because it's not fully collateralized. In most cases, the home is going to be worth close to the asking price, and you're going to be asked to put some amount down, 5% down payment, up to 20% down payment, or whatever you choose to put down on the home loan, which means that the lender is likely going to be fully collateralized and secured, and if you default on the mortgage, they're just going to take the house, they're going to kick you out, and the process is called foreclosure, and then they're going to turn around and they're going to sell the house and use the proceeds from the resale of your house to cover the loan that you defaulted on. That's why they want the loan to be fully collateralized. So primary differences between the two: credit card, low dollar, based solely on a credit report and score; mortgage, much higher dollar, based on credit report, credit score, your capacity or your income, and the collateral of the loan or the value of the house relative to the loan amount. Very different scenario. Finally, credit card scenario, you can apply online and be approved by the time you log off. With a mortgage loan, you apply and it could take several weeks for there to be an approval, because they have to go so much documentation before they're going to actually approve the loan and set up the closing. If you have questions pertaining to credit or any other financial topics, please submit them to creditcardinsider.com. Thanks for watching. Have a great day.